You have $1,000. Let me tell you how to invest it. Hi, welcome to my channel, the best place for entrepreneurs and working class people who are looking to improve their personal finances and invest profitably. Today we'll be talking about how to invest $1,000. So I get this question a lot. I have 1K. How do I know how to split it to invest? Because we all agree that you can't put all your eggs in one basket. Hello, you cannot put all your eggs in one basket. So we're going to talk about it today. I'm going to give you clarity on how to invest $1,000 right now. The first question I'll ask you is, when do you need the money back? What is your time horizon for this money? If it's just money that you're putting away into the future, then the conversation is different from if it's money that you need in a year or two. So let's start with the first scenario. Scenario one, you're putting the money away for the future. Now, when you're putting away money for the future, you are thinking about growth. You are thinking about increasing value at retirement or for retirement. You are thinking about stability. You can accommodate some volatility in your portfolio because in the end, things will even out. So I'm going to be mentioning a couple of investment options. If you don't really understand them or how they work, I will drop links in the description box to videos I have done about them so you can really understand what I'm saying. So now let's get to the business of it all. You have $1,000. You don't need the money anytime soon. You want to invest for the future. The first thing you're trying to do is you want your money to grow. So let's put some money in growth stocks. Let's say $200 out of that into growth stocks or growth ETFs. Like I said, the link to explain what these things are is in the description box. So I'll put $200 in growth ETFs, right? Then I'll also put another $200 in a dividend paying stock or in an ETF that invests in dividend paying stocks. Why? So that you can take advantage of compounding. When you get your dividend, you reinvest it. So you're getting some cash flow. So I'm going to balance between things that will take your cash and you'll be gone for a while and things that would give you cash that you can reinvest. So you can take advantage of compounding. So like I said, I'll put $200 in. I'll put $200 in a growth stock or growth ETF. I'll put $200 in a dividend paying stock. So we have $600 left. Then I would put $300 in a Eurobond fund. Now, what is a Eurobond fund? It's basically fixed income. It's more stable. So the stocks are more volatile. The stocks are higher risk and they give you room for growth. But then you also want stability. So I'll do a Eurobond fund, which will give you really reasonably high returns on the dollar, but also some stability, right? Because they are backed by Eurobonds, which are fixed income instruments. Gosh, I hope I'm not throwing you off with all this, but it's very easy to understand. Just write it down. I said $200 in growth stocks, $200 in dividend paying stocks or ETFs. The third thing, $300 in a Eurobond fund. Then I will do $200 in a commodity, in commodities like agric. So agric will give you high return, but it's also high risk, which is why I put just $200 there. And finally, I'll put $100 in cash or near cash items like commercial papers or treasury bills. Now, I hope you've written these things down. Look at it. What I have done is that I have put a balance between high return with high risk and stable return with some low risk to balance out your portfolio. So for example, dividend paying stocks are generally more matured and they're more stable. They're more likely to grow. All things being equal, those companies will be here for a while, right? Now, growth stocks are stocks that if, for example, the project or the plan that they are banking on succeeds, then your returns will be astronomical, right? So you need to also have some there so that, think of the Facebooks of this world. Their growth has been amazing for everyone that put money into them at the start. Then I also did some stability in interest rates. Interest rates are like guaranteed return. You get your money at a certain time, you can reinvest it. So you have some cash flow to reinvest along with the dividend that comes in from your dividend paying stocks. I hope you understand my psychology. Now, the truth about it is that whilst I've given you a breakdown of where to slot your money in, you have to select the stocks. You have to know which Eurobond fund to go into. You need all those recommendations. I have a free resource in the description box, a masterclass on where and how to invest. It would help you understand and put in the right context everything that we just mentioned. Now, let's go to the next option. If you need your cash in a year or two. Now, take it from me, a year or two is a short time. It is a short time, especially when it comes to investing. So if you need your money in a year or two, say, for example, you are saving for school and you just want to put the money away so you don't spend it and so you get some interest on it or some return on it, then you have to be less risky in your investment. So if you need your money in a year or two, my recommendations are to put it in fixed income instruments that possibly mature in 2 years' time and near cash like treasury bills and co. Now, if you're in Nigeria, Agric offers high returns and shorter term. I would say that in the first year you can do Agric, but by the time you're getting towards the time that you need your cash, then move that investment in Agric plus the returns into more stable investments like commercial papers and co. Because the major thing when it comes to investing is that you have to invest with yourself in mind, your personal need. And also, don't forget to check out my free resources to give you the guidance that you need to get started. And please subscribe to my channel. I have very good content for you that will get you on the right track for investing. Don't forget that there are 2 things you can't outsource: your health and your finances. You have to engage. I'll see you in the next video. Bye.